right, you guys. All right, this is part 4. I hope it's the end. I'm losing my ability to concentrate. I think I've repeated many times, but I want to finish off my reasoning why you should exchange your MMTLP for your belongings, and don't leave it to hotel staff to make sure that you get what's of value. Okay, let's just go. All right, let's, in no particular order. What is MMTLP worth? MMTLP is worth the value of this chit. If you turn it in while there's this time frame that you have a chance to do it, it's worth the value of Next Bridge. What did Wall Street owe you? Wall Street owed you and me. It's right there, MMTLP, on the record date, would exchange into 1 share of Next Bridge. Now, the argument is, well, if you get that 1 share of Next Bridge, you're not going to get to participate in a settlement. They've done what they're going to do. So what I want to try to do right here is to show you, 1, that that's a valuable share, and 2, if you follow that argument, if you listen to that devilish argument, that the MMTLP shares become of questionable value. If you take the hotel chit down and you get your belongings, you have your belongings. If you ignore this, the hotel and the lawyers for the hotel are going to say, hey, you abandoned your property. I'm sure in the law there is something that the other side will use to say, hey, William never even applied for his shares, so he wasn't that interested. Obviously, he was just in it for the speculative trade or something like that. They're going to fight. The other side is going to fight on all sorts of issues. They're going to say, the one I just said, that they're going to argue that you never even asked for your shares. So you could have gotten them if you had asked, but you just were negligent or disinterested. That's one. 2, they're going to argue that only people that were original Torchlight shareholders deserve to get the shares, which is false on its face, but they'll argue that. This is the lawyers from the other side. The lawyers will argue, well, all we should owe is $2.87, whatever the closing price was, because the market determined the value of the shares at that time on the December 8th. And that's the closest price to what we should owe. So we'll pay the $2.87, take out legal fees, take out costs. We'll credit everybody $1.50. And that'll get a lot of credence. They'll argue the trades were false because the MMTLP was created on a fraudulent basis, so we should just unwind all those trades. Hey, it's not us, it's FINRA or whomever. So you could have all the trades unwound, and then you just get your cash back, whatever you paid. Or they could say on a blanket level, we're willing to pay $3, $8, or the maximum maybe would be $12, the highest price, and we'll settle at that level, take out fees. Those are all possibilities. The other thing is sort of a gray market, and I think that's where it will go. eventually, and probably, I'm surprised it hasn't started now. But maybe, and this is the caution, maybe as the lawyers are looking at this, they see all sorts of ways out. But I'm surprised some of the smaller broker-dealers aren't already saying, we just want to get out of this situation. Now, it may also be they have enough shares to distribute. We don't have enough facts. But how would a gray market work? Gray market most likely is going to involve your brokerage firm calling you up and saying, I've got a buyer for your MMTLP at $2.50. Are you interested? Click. And they call the next one, call the next one, call the next one. And this could be a settlement too, this process of almost an upside down bidding process. But they'll go with low numbers. And it'll be a certain amount of shares maybe. And it might not be every brokerage firm. But they're going to require you to sign a release. And so all those things that the guy yesterday was talking about, if it goes into gray market, you're going to sign a release giving up double or treble damages. You're going to sign a release giving up that your brokerage firm did anything wrong, the system, and you'll end up with that low number. Only you know your staying power. My guess is a lot of people would take $3, $5, $10, $15. I think a lot of people won't take anything below hundreds of dollars. But anyway, that would be how a gray market works. But what would be the worst case? The worst case, I think, would be that this drags out for 8 or 10 years, and in some sort of luck, brilliance, and I can't create, I'm not a lawyer, but what if the brokerage firms and the other guys win? And you get de minimis return 8 years from now, minus lawyers' fees. And so you get, it's like one of those settlements, you get a postcard in the mail, and you might get pennies or dollars back. You get $100. You win a cruise for 8 days, but no nights. Is it worth taking that risk? Is it worth saying, I'll take the chance with my chit, or do you want to get your belongings? Anyway, I can see scenarios where MMTLP, after the 165 million or close to it, doesn't have to be perfect, is accounted for. That this, right now, when you're in a hotel, your chit has the value because you know that your belongings are there. I can see when it comes after the 165 Next Bridge shares are spoken for, this only is worth the present value of the perceived possibility of winning a lawsuit. To me, that's not much of a chit to hold. Also, the other thing I think will happen, as people start to think the way I'm thinking, as it moves toward a fuller delivery of shares, as you get, as everyone says, I'm waiting for the S1, as if that's a sensible decision. I'm going to wait till the stampede happens. I'm going to wait till they ring the fire alarm and the hallways are full of people before I get out of the hotel, even though I know a fire's coming. I personally, right now, the system is giving you what it promised you. 1 share of Next Bridge for 1 share of MMTLP. And to me, that's fair enough. That's fair enough. I'll take it. The other thing they could have given you is those 2 days of trading. There's short squeezes. That's gone. But that might still be available in lawsuits, and I bet there will be lawsuits. Okay, so let's get off of that point. All right, let's go to the guy's points about the settlement. You've got fraud, you've got pain and suffering. I'm going to add opportunity costs. And of course, you're keeping a ledger. You could add to it, there's one other legal term, but that's good enough. There are things that penalties and costs that could be argued in court on 3 or 4 different levels that could win. Now, let me ask you something. As a holder of Next Bridge, who, in my judgment, I overpaid, although I kind of wish I had bought more, But anyway, as a holder of Next Bridge or a holder of a chit, let me ask you one thing. If you knew nothing else, and I'm the only guy, and I had to go into an attorney, and I have no other assets, I had to go into an attorney and say, I have a chit and I have a legal argument. Will you represent me? Or I went in, I have my belongings, my asset, and I have a legal argument. Will you represent me? I don't have any cash. Which one would the lawyer do? By owning the shares, you have the potential to have some substantial assets. This is just nothing. Once the 165 or close to it are spoken for. Okay, so let me ask you, on the 2 days trading, if you get your shares, does that mean you don't have a right to that claim? No. They owed you the shares, but they still also owed you the 2 days trading because that would have been prior. So no, if that's a good legal argument and it wins, you're part of that class. And I think it'll be incorporated, some cost for that, which I mentioned in the last video as a cash dividend, will already be incorporated in the settlement. Let me ask you about opportunity cost. It gets a little more complicated because if you just went into the private company, you would have to wait anyway. But if you had those 2 days of trading, you did have the opportunity cost. The other thing is penalties for fraud, treble damages. Well, number one, how do you define damages? What the guy yesterday was suggesting is the best way to get, using my example, to get $1,000 a share in damages is don't ask for your shares. Don't go get your $1,000. Just have the chit and say, hey, they didn't give me the $1,000 a share. That's the value I lost. And there's a court case, look it up, Google it, catch up on the law. Well, wait, to get that 1,000 shares, you're going to have to show you asked for it. You're going to have to show you took the steps. You're going to have to hire an attorney. And the biggest question is, well, there was the $1,000 a year, 500 days later, a share or whatever, and you didn't do anything about it. So the best way to win a settlement of a loss is make sure you have the loss. But anyway, what I want to say to you, if there was fraud involved, what happens is in a lawsuit, you get all worked up that you want justice. I do too. And you want it done and they got to pay it. But the fact is most lawsuits settle. So that fraud and that theft will be incorporated in whatever the settlement is, and back and forth with the lawyers, and the judge says okay. I just have to emphasize, though all of us were defrauded, it's been painful for all of us. So the settlement, which I think Greg McCabe is the single largest holder of all parts of this, but also all the lawyers on the good guys' side, the settlement's going to include all of us. So what do you want? A real asset or a chit? All right, now let me show you how many, 15 minutes. I'm just going to give you two valuations, and then I'm going to end it. I love this letter that Nunes put out, and he copied the MMTLP letter. I love it. I love it, I love it, I love it. All right, let's start with one number. See, I'm tired out. I'm fagged out after a prolonged squawk. Oh, he's pining. Pining for the fields. All right, here we go. Got it. Got it. All right, so I want to give you the lowest number first. This is March 2020, Torchlight presentation, and it states that it's the largest onshore discovery over the last 30 years. And it also has a safe harbor statement that everything that's in this presentation may or may not be true. It's got the reasons why it's a good investment. This is from 4 years ago. It's a pure Permian Basin play, which is where the United States rivaled the world's biggest producers of oil, and we became the swing country for a while. Pure Permian. They have a good conservative development plan. They have well-established leadership. They have Rich Masterson, the company's consulting geologist, deep domain experience in the Permian Basin, and is responsible for leading acquisition, development, and technical efforts. Okay. Here's where their projects are, and that's what Next Bridge is. I'm going to skip that. I'm just going to read about Rich Masterson. Rich Masterson, he originated the prospect, Oro Grande, as well as the Wolfbone unconventional play in the Delaware Basin. We talked about that Delaware Basin in the first couple of videos, where he prepared prospects totaling over 150,000 acres, which were leased, drilled, and are being developed by TROX, I don't know who that is, Eagle Oil and Gas, Rosetta, Devon, Browning, Thompson, Oxy, Noble, Sampson, Piedra, Brigham, Atlantic Exploration, Centennial, Anadarko, Shell, Chesapeake, and Concho, Petrohawk, BHP. I didn't name, I read quickly. He's created numerous prospects and discoveries through the Permian Basin, from shallow to deep, since he started his career with Texaco in 1974. He holds a Bachelor of Arts degree in geology from Trinity University out of San Antonio, Texas, and he's a member of the West Texas Geological Society. Gregory McCabe Let me read about him quickly. He's an experienced geologist. He's not just a financial guy. McCabe from Midland, experienced geologist who brings over 32 years of oil and gas experience. He is the principal of numerous oil and gas focused entities, including his own company. And Masterson Royalty. Interesting. He has experience in technical evaluation operations, acquisitions, and divestitures. He's the largest shareholder. He brought in a couple of the other assets. Anyway, all right, let's go on quickly. This is the new field discovery. This is their seismic, basically, map, ISOPAC. This is why they call it benches. This is a different play, the Winker project. But when you have thick, tight sands or tight rock, you determine, used to go down horizontally only. Now you go down vertically. You go down vertically, turn the bit, and you go horizontal, and you do several entries. But because you know or determine that you can frack and produce those zones, you can go to a lower bench without commingling production, without sucking the same oil out of the same straw. Anyway, that's the kind of thing that Pioneer is doing, that Exxon paid $30 a barrel for proved reserves a few months ago. By the way, there, in this thing I just showed you, it's the upper Bone Spring, the lower Bone Spring, Wolfcamp A, Wolfcamp B that they're looking at. Look at how many wells. You go from a virgin project. Look at how many wells you can end up drilling in this acreage. It goes from an idea to drilling and proving it up, to getting engineering reports, and then turning it, if it works, into an assembly line, almost a production process. One of the valuation methodologies you can get is, what is acreage worth? Well, acreage in the Permian went for $20,000 a share, an acre and higher. They have 130,000 acres. You could do an acreage calculation. I'm going to skip that for now. I did one and add a low number. I didn't use 20,000. I used 7,500. I think I came up with $2 to $3 a share is the value just of the acreage, assuming they've been having success. And I think, and I'll read the headlines, I think they have been. 133,000 acres. Okay, let's just go to, let's just go quickly to the Next Bridge site, which you can do. nextbridgehydrocarbons.com. And let's bring up, okay. You gotta then go to investors. And they give the news releases. So they just gave an activity update. Let's just read some of that. April 16th. They closed a participation agreement. Oh, I read this to you before. This is the Southern Louisiana projects. You can read it. I think those are great transactions. They generate cash because Next Bridge has to drill, I think, 5 wells and complete 5 wells by year end to hold their leases, and they're going to do it. Here's the name, Equinity. They describe that. They describe some transactions. I want to get, okay, they describe the U3 halt. I don't want to get buried in that, but they're putting that there. They talk about the Johnson prospect drilling. Last year. All right. The news is here. I don't see any update that's going to help me give you a valuation, but they did acquire the remaining interest in the Oro Grande. I don't think they would have done that unless they thought something was there. Here's an operational update. Let me see if it's from February of last year. They did drill and complete the 5 wells in 23 that they needed to drill. So they drilled 5 in 21, 5 in 23. They have to do 5 this year. That's 15. That's in the deep part. They have no immediate plans to deploy the capital necessary to sell production from these wells to third parties. We plan to use the results of these wells to determine our drilling plans for future wells, including reservoir locations, target depths, and designated acreage. This is the reason you don't produce in Texas. You keep the information tight so you can go acquire acreage, make sure you have control of the zones of interest, and you make your drilling plan based on seismic. Okay, let me just read this. This is important to understand. You know it already. The company, this is from last year, a year ago. The company provided an update on the distribution of shares following the recent Next Bridge spinoff from Meta Materials. American Stock Transfer and Company, it's now Equinity, the registrar and transfer agent for Meta and Next Bridge, has notified the company that it, AST, has completed the distribution of shares of common stock to all the brokers of record at time of the spinoff. If your broker is not showing your shares in your brokerage account, it's not because your broker has not received the shares from AST. Okay, I want to move on. I got to leave this out for the calculator. The value, according to the 4-year-old, 5-year-old presentation, project overview, 134,000 acres under lease, and I'm going to read this exactly as it's written. Very large upside in potential hydrocarbon resource recoverable dash third-party valuation from stimulation petrophysics. Now, it's not saying it's 100% certain, but they're giving the recoverable cases. The low side case, the low side case 4 or 5 years ago was before they drilled the 5 wells, by the way, in 21, before they drilled the 5 wells last year, and then they have to drill 5 wells this year. So before they got additional science, before they acquired 125% more of the working interest, and before they had the shallow results in the Johnson project, their lower case was 2.3 billion barrels recoverable, 3.7 billion barrels medium case, 5 billion barrels high case. Now, this is at 75% ownership, not 100%. This is before they drilled 10 to 15 wells. This is before the shallow, and I would add, this is before they, I didn't see the announcement here, but it was on Twitter and it was talked about that they found another zone, another bench. So there's a lot of reasons to believe these low, medium, and high cases will shift to higher numbers. I just want to take the low one, 2.3 billion. That's the low case, 2.3 billion barrels recoverable. Okay, I just want to take that. I'm just trying to come up with the lowest, most disappointing, the most boo bird, the bashers number. Oh, you don't know the value. Oh, that's all right. So I'm gonna, instead of 2.3 billion barrels, let's take a third of that. Let's discount it by 2/3. So I'm just going to get this out here because I always screw up in my head. So we'll take the low case from a third party of 2.3 billion barrels recoverable, and we're only going to take a third of that. So 765 million barrels. I've never done this calculation before today. I'm just trying to be as negative as I can. Let's just assume now, if someone were looking at it, they'd say, because of the wells drilled, let's say they're going to drill some more wells. This is a little premature in the sense they still have work to do. But let's just go, ultimately, this is all they can recover. 765,900. Now, Exxon paid $30 a barrel for a fully in place producing plant, and they have plant. When I say plant, it's like a process. It's like a manufacturing process. They paid just under $30 in stock per proven barrel. Well, oil at that time was around 40 something. Oil prices have doubled. I don't think that $30 would have doubled, but it might have gone up significantly. And what happens is that good projects get bought. And then just like in any supply and demand, except for the American stock market, supply is endless. The prices could go up as the cycle moves. But instead of using 30, even though oil prices have doubled, I'm just trying to decide what to use. 15, 20, 25. I'm going to use $12.50. This is going to be a bad deal. I'm just trying to be so conservative. So let me multiply that out. It's going to be a pretty low number. So you're going to have 9 billion. I come up with a $9 billion purchase price or value. Now, there's a really good argument legally to make that the Wall Street owes us a settlement on a non-diluted basis. And there's another argument, obviously. You take this value and divide it by the outstanding shares, which is around 260 million outstanding shares. I'm going to divide it not by the outstanding shares. I'm going to divide it by the authorized shares, 500 million. Do you understand what I said? The authorized shares are 500 million, but there's only 260 million outstanding. I'm going to take the value, and this is early because they still have to prove this up, but I've tried to haircut it and be so conservative. I'm going to take that and divide it by 500 million shares. Guys, I tried to be so conservative, and I still came up with $19 a share. So you're telling me that whatever number of shares you have, it's better not to claim them. I mean, to me, worst case, you're talking $20 a share. This is the worst case. And it's better just to leave it to Congress, lawyers, Wall Street. When has Wall Street ever helped you out? Okay, now let me try to get a more realistic number. I'm talking about as they drill, as they prove it up, and that could take years. It could take, I don't know how long, because I haven't seen the science. I haven't seen the reserve reports, but I would guess it could take 18 months to bite into this, to 3, 4, 5 years. But remember, as a bull market happens, and if you have more than one bidder, and if the data is good, they'll start paying up for that the further you move down the timeline. So here's the high, medium, and low case. I'm just going to take the medium straight out. Not the high, low, not the high, the medium. 3.7 billion barrels of oil. Recoverable. $3.7 billion barrels. And instead of haircutting that by 2/3, I'm going to haircut it by 1/3. So that's going to give us my starting point of a perfectly reasonable upside, not too hot, not too cold, of 2.5 billion barrels. Now, I'm going to further say that once this is proven, Exxon paid both for proven reserves, but they also paid for all the infrastructure that was there. So instead of using $30, I'm going to use $20. I got to start over because I hit a 0. And you already know the number. So it's 50 billion. I think that's a reasonable valuation. I took the median case, the middle valuation. from 4 or 5 years ago. This is when they owned 75%. They now own 100% working interest. This is before they drilled up wells, before further science and further seismic. I took 2/3 of it, and I used $20 instead of $30, even though oil's now $90 a barrel. And I came up with 50 billion. Now, instead of dividing by authorized shares, which is ridiculous, I'm going to divide by outstanding shares. 260 million. This is a conservative number. This number still involves putting capital to work. It still involves time. It still involves risk. But this is a conservative number. $192 a share. $192 a share. $192 a share based on third-party representations at 75% ownership, not 100%, before they've drilled the 15 wells, before they got the shallow, before they discovered another zone, and before oil prices went to $90. So you're saying, if you want to believe the other side, you're saying the best strategy is to, I can't find it. Your best strategy is to keep your chit instead of your asset. Keep your chit instead of $190 a share. Keep your chit and run the risk of abandoning $200 a share. I think a conservative number. Okay, finally, I just want to do, I want to do what I think could be the settlement number. And admittedly, because we're talking settlement and we're talking that they took time away from Torchlight, because they had to fight those criminals, but also time away from management, opportunity to get money. You could shrink this timeline back to the start. So I'm going to go with the high side case. $5 billion barrels. I'm not going to discount it, because remember, there's discussions out there that they have up to 13 billion barrels. I would caution that's pretty big, but I've seen 11 billion, 13 billion. I've seen 7 billion. I've seen the range being between 3.2 and 6.7 billion. So I'm not going to discount this. I'm talking about settlement number here. I'm on the good guys side. I'm going to go with the good guys calculation. So 5 billion, and Exxon paid almost 30. So I'll use $29. That gives 145 billion. I left some zeros off. 145 billion. Now, this number comes prior to what I think we all think is fraud of the U3 halt. This number is more current, but it's still a discount from the fact that we're later in the cycle and oil prices are $90. But I will say at that time, oil was $27, $30, $35. So I'm going to stick with it because this number itself could be argued to be closer to 6.7 billion. I'm going to stick with this. I'm trying to come up with a calculation that the settlement should be for the good guys. Now, here's where this number gets big. They owed, at that time, there were a few extra shares. I don't remember what it was, so you'll have to round that down or out. But I think it's clear that they owed us 1 share of Next Bridge for 1 share of MMTLP at a time when the shares outstanding were 165 million shares, maybe slightly more. So they owe us the value of 1 over 165 million. You could quibble, maybe it's 1 over 170 million or something. But, I don't have that data. So I'm going to divide this by I'm going to divide it by 165 million shares, and I get $900, 878. That's less. I think what I did before when I got 1100, I used 6.2 or something up here. But anyway, it doesn't have to be exact. You can see the magnitude. Now, if you add to this $50 or $75 for attorneys and $100 for a cash dividend to pay for pain and suffering to everybody, and on top of that, you have a little wiggle room of another $50, you're talking $1,000 a share in settlement. And I've already gone through how that settlement value will come to the shareholders of Next Bridge. All right, I'm tired. I don't know what else I said or should still say. But my message to you, with 2 minutes to go, my message to you, I couldn't state stronger. I've spent 5 hours this morning to try to make it, is you own MMTLP. Right now, that is worth Next Bridge. Once all the shares of Next Bridge are allocated, your chit, your MMTLP, is worth the argument that there's a court case, look it up. The argument that, the regulators should come and do something. The argument that Congress should do something. Right now, you've got a whole army of people working. Will you always have that? Right now, you've got everyone's energy going and Congress looking, and now it looks like DJT. Will you always have that? But more than this, you've got a lot of attorneys, from Mark Bazile to Richard Hoffman to Rosa and this guy, Howard, I think. They're doing this work. Will they always be there? Will you have to spend money once the shares are gone? So what I hope after this 4 hours, if you listen to all of it, and I hope it was okay, is please turn in your MMTLP shares for your assets. You wouldn't leave $500 with a coat check, guy or girl, without rushing down to get it. Rush out and get your asset. Now, do you miss out on anything? I guess I got to say that. Do you miss out on anything? I can only think of a couple of things that you might miss out on. You might miss out on the gray market crap. But I would argue that's not a good thing. If your brokerage firm starts offering numbers on MMTLP to you, you're not going to resist taking it. It's going to be a low number. You're going to have to sign a release. If they're doing it, that's because they know they will have the data from their attorneys that there's value here. So they know that they're offering a price lower than what the shares are. So I don't really think you're missing out, but that's the point, that maybe that's liquidity and you get that more quickly than being in Next Bridge. I'm going to address that in a second. The other thing you could argue you'd miss out on, I guess, is the pain of 8 years, a decade of lawsuits, and maybe the settlement at the end of the day would somehow be bigger. I've just tried to show you it's not going to be the case. So you'd miss out on the pain and the trouble of those lawsuits. Now, if this is going to be my final point, if somehow it all comes to this magical settlement, it's going to be a gray market, or there's going to be an offer made by brokerage firms for MMTLP, for this chit. And even if, which is crazy, that offer represents a value more than Next Bridge, even if you go back and remember my big picture thing here, where I had that the problem was 1 billion shares, the system is going to look for any way to minimize those ultimate costs. I think they'll offer less than what the ultimate settlement through lawsuit or otherwise, they'll offer less than what they think the value of the assets are, just to get you to sign a release, and you want cash. Well, just logically, the one thing I remember from my business law class is that when I was taking the exam or I was doing problems, if I just thought logically, it was usually the answer. What is the logical conclusion? The logical conclusion is, to solve this problem, why don't we open up our bid for cash, which is less than the value of what we think an ultimate settlement will be, or the risk of a lawsuit going all the way, and it's less than the value of what we see in the per share price. Of course, it's inclusive of the shared experience of fraud, opportunity cost, etc. Why don't we open it up to Next Bridge as well? So, ladies and gentlemen, that if you own Next Bridge, we also make this offer to you. Why would the brokerage firms do that? Because they get real shares that they can allocate. It is logical that if you're in MMTLP, this chit, which is worthless, it's just a hold for the proceeds from a potential lawsuit, which may or may not happen. Oh, no, there's a court case, look it up. Well, someone's got to defend it and then defend against the arguments on the other side why that court case doesn't apply here. But you have the shares. If you have MMTLP or if you have the shares, we're opening up the settlement to everybody. I believe the settlement, if it ever gets there, and it'll be way down the road, and if it's attractive, will be available to everybody. In the meantime, any progress here, including higher oil prices, including more wells drilled, including distributions, including other acreage bought, other activity in southern Louisiana, redounds to you, and you don't have to go to the court system. All right, I'm going to sign off. Thank you for listening. That's it for today. Boy, that was a lot. But luckily, you can listen to them all in a row or not listen to them at all. I want to do a video on TLO, Finger, a couple others I was thinking of. And then when I'm in New York, I'll do a video on thoughts. Anyway, have a good weekend. Thank you for listening. And remember that Lucky loves you. Or he would if he knew you. Cheers.